Good day, everybody. Welcome back to another episode of the Ramos Law Difference Makers podcast. And today is a special day. It's a great day. And just like every other show, I get a chance to meet with cool people doing cool things and who are literally making a difference. And today is one of those topics that we're going to talk about that's going to kind of bifurcate. It's going to start out by talking about insurance. And before you judge what insurance is or isn't, you're going to want to hold on. You're going to want to pay attention. And you might even take some notes, because we're going to share with you information from an expert about why insurance is important, what it does for people, and frankly, what it may not do for people. So we're going to talk about that. And then we're also going to talk a little bit about business and entrepreneurship. So this is going to be a great episode. I hope that if you enjoy this, that you share it with folks, because starting right now, we're going to be talking to the amazing Sandy Robertson from Farmers Insurance. Sandy, welcome to the show.
Thank you, Dr. Hoven, for having me today.
It's my pleasure. And I'll tell you, any friend of Gabriel's is a friend of mine. And I know you guys work together and you got a chance to be with him. And he when he was telling me about you and just kind of what you were doing and what you're about, I'm like, we need her as a podcast guest.
Oh, that's exciting.
Yes, because here's what I know. People don't know what they don't know until someone shines some light on it. And there's no better example than that of insurance. And you are an insurance expert. You work with farmers in your own business, but you've worked in the industry for going on a decade now, right? Better part of a decade.
Yes.
And what are you seeing in insurance today that maybe looks different or is changed from when you first got into the business? Are you seeing anything like that?
Yes, absolutely. I think there's changes everywhere. I think people don't understand the value of insurance. So you have a lot of uninsured motorists out there.
Do you know what the percentage is? Because I've heard numbers, but I'm not in the industry, so I wouldn't want to not understand.
I would have to estimate at this time, but I would say about 70%
of people are insured, and
probably
30%. 30% have zero insurance?
Yes, correct.
Because that's the number I heard was about 28% of drivers did not have any insurance.
Yeah, and it might be a little bit higher now with, we're...
Cost of everything.
Yeah, the cost of everything, and our population is going up as well. Mm-hmm. So it could be a little bit higher.
And first of all, talk about the basic types of insurance that someone would want to look at. In other words, there's home, there's auto. Is there a bucket or a group of categories that people should think about having insurance?
I would say really look at the coverage limits you have. Mm-hmm. That is very important to have the adequate coverage for your auto. There's a state minimum of $25,000, $50,000. That's state minimum. That's what anybody could get. But is that going to cover bodily injury?
Right.
Someone getting hurt in an accident. It could not necessarily. You're looking at, we have electric vehicles now. So those are a little bit more expensive than driving a Honda to, cover as well. So yes. I would say limits are very, very important.
I totally want to piggyback on that with you. Working here at the law firm, we see people every day who have been in car crashes, and the people that are our clients are on the side of the ones that it wasn't their fault. Mm-hmm. And what I have seen far too many times, Sandy, far too many, is someone comes into us and they say, oh, I've got full coverage. And then it turns out that the person that hit them did not have, either A, they were uninsured, or B, they had the minimum policy limits, which in Colorado is $25,000. That's what we need to drive, right, by law.
Yes. But
they ended up going to the hospital in an ambulance where the initial bill was already $20,000. Mm-hmm. Now there's $5,000 to try to care for all the rest of their injuries that could take months or years. And not only that, but then there's no more money left for a settlement to help for lost wages, to help for pain and suffering, to help for loss of daily activities. None of that's there. And so like you say, the amounts of coverage is crucial. Can you explain the amounts of coverage, and we're talking auto now, we can get to other stuff in a little bit, but with respect to auto coverages, how does it work in bundles of limits? First of all, maybe explain the 25-50. So if someone gets 25,000, there's also 50,000. Can you kind of explain that?
Yeah, so the first 25,000 covers obviously like bodily injury. So then you would have a max of 50,000 to cover both, you know? So, overall, I would say I would recommend 250,000 coverage because that gives you leeway.
Right.
You know, and it doesn't matter like the cost of the vehicle, you know, it's mostly to protect yourself from someone coming after you.
Absolutely.
You know, and that's a lot of people don't understand that at all. It doesn't just stop at a medical facility. You know, it could go to court. It could, you know, cost not just wages on both ends, but, you know, it costs a life. And unfortunately, if you cause the wreck and you not only do you have that mental note that you ended someone's life, but also like on top of that, you have costs.
Yes. And you know, the funny thing about that 25,000, 50,000, and for those listening, the way that the coverages work is whatever you buy, there's the amount that is allowed for an individual and then the amount that's allowed for a group, right? So if there's 3 of us in a car and the person that hits us has 25,000, 50,000, no one of us can get more than $25,000. Even if our hospital bills were 80,000, if there's 3 of us, not one person can get more than the 25, and then everyone combined can't get more than 50.
Right. Yes.
That's where it gets tricky. And so you mentioned this 250,000. So for those people that are watching, listening, you can purchase coverages at basic levels and getting to more advanced levels, right?
Right.
So 25, 50. Yes. And then what, 50, 100?
Yeah, 50, 100, then 100,000, 300,000 as well. So, and up to the 250,000.
Yeah. So, you know. 250, 500. Yeah. So,
yeah.
Yeah.
And it helps also with like the home as well, you know. So there is several discounts, but that's besides the point. I think protecting your assets, your family, and yourself from being sued, you know, unnecessary, you know, dealings. Yeah. That, you know, that is going to put you out of work because you have to go attend a court date or, you know, a medical thing that comes up.
And interestingly enough, people don't understand this. It's so common that they don't get it, right? Where again, we see it every day. That's why this is such a passion topic for me, and I'm so glad you're here. Because if someone gets in an accident and it gets messed up, for example, one of our team members here was in an accident where someone in her car was killed. Their life was lost. 4 people in the car. Turns out that the person was driving while intoxicated on the wrong way on a highway and just, you know, front end to front end. And head-on collision caused immense damage, medical bills, loss of life, tragedy. There's no way that guy, that person who was driving the other car, that coverage even at 250,000, 500,000 is going to be enough.
No,
right? There's no way. And that happens all too often, and not even at that magnitude, but someone gets in an injury situation, gets hit by someone who is underinsured. That's why there's a thing called uninsured and underinsured motorist.
Yes.
For just that scenario. Can you kind of explain UMUIM for our audience?
Uninsured motorist, so it protects you. It protects if there is uninsured motorists out there. So it's a limit that we can use to protect you, as in cover you in case something of such happens. It could be a hit and run. We have those often. You know, we have to file claims a lot for those. You can never find the person, so that's where that coverage would come into place to protect, you know, to get your vehicle repaired. Sometimes it does end up in where someone does pass away, so there still is that leverage right there, and unfortunately there's times where we can never find the person.
Yeah. And that underinsured, and I think it's important to distinguish between uninsured and underinsured motorists, because if you have someone who is injured to the point where they use all of the benefits of the person that hit them. So if they only had 25,000 coverage for the person they hit. And this is it. When I teach this to people, I always tell them BI, bodily injury, BI protects the other guy. UM or UIM protects you. So if the bodily injury person hits someone and doesn't have enough coverage, then at that point, if that person has underinsured motorist coverage, then their policy kicks in, right? In order to make up the difference of what was already paid and now exhausted and what still remains both in treatment costs and in settlement costs.
Yes.
So that becomes important.
It is very important. And a lot of people don't understand the value of it. They're like, oh, well, that's expensive. Well, so is going to be like the rest of the cost. So if you are underinsured, you accidentally get into a car accident, at least you have that leverage as well.
Yeah, it becomes critical because when you look at having these policies, and I'll let you speak to this, but I know for sure, looking at even at my own policy, most of the expense is on the basic coverage of what I have. So if I wanted to, it's not that much more for me to get bodily injury of which, we're along the lines of what you are, 250,000. We have 500 is what we carry, because in our state, you can't cover yourself more than the other guy. You can't protect you more than I'm willing to protect you from me.
Right.
So we have 500 so that if I'm driving around and I cause an accident, there's that much. But then I also have the same amount, 500, that if you hit me and my damages are severe and you are underinsured or uninsured, now I have the most to protect me too. But most of my premium is happening at the base level, right? Just to have the basic coverage. Is that what you guys see?
Yes, we see that very often. Rates are going up, and it's something that we can't prevent.
Why do rates go up?
It goes off the base of the cost of living as well as the claims, and uninsured motorists out there as well. So that's a lot of the costs of it. Unfortunately, yes, we have to pay for those that don't pay for their own insurance. That's the way it comes down to.
Yeah. And let's talk now again, there's we're talking about auto right now. We've talked about bodily injury, which is what you get to protect others on the road when you're driving in case you hit them. There's underinsured and uninsured motorist that is in place to protect you if someone who hits you either has no insurance or is underinsured related to the amount of damages that you have to your body. And then there's this thing called medical payments coverage, what we call MedPay. Can you explain a little bit about what MedPay is and how it works?
The medical payments works as if someone were to be hurt in an accident, there is a percentage of medical payments that the insurance would cover. There is maxes. Every insurance is different, but you can carry as much as you would like. I know with farmers, we have up to 50,000 in medical coverages. It doesn't just protect the driver, but it also protects passengers in the car.
Yes, and regardless of who was at fault. That's the beautiful thing about MedPay is if someone hits my car and I'm in it and I have MedPay, my MedPay covers me and all my passengers.
Yes.
And if I hit someone else and it's my fault, my MedPay still covers me. It doesn't cover the other car's party, but that covers me and my party, correct?
Yeah, correct.
And so MedPay, those three are really powerful. And MedPay, I believe the minimum amount you can take in all companies is in Colorado is $5,000, correct?
It is $5,000. Yeah.
And then each company has its own maximum.
Its own max.
So 25 or 50.
25, 50,000.
Yeah.
It kind of depends on the companies, how they want to deal with it.
And so here's the question that I'm sure people that are watching or listening right now are asking, are like, holy crap, there's so many coverages and they're so wide varied. And she just said insurance expenses are going up. Do you have a range of how you say, what's the thought process of how much someone should get? Because just think of it this way. With nutrition, right? If we're looking at nutrition for our bodies, what nutrients you should take is almost 80 to 90% dependent on what your budget is for those nutrients. So in other words, if you have the budget to afford super specialized nutrients plus foundational nutrients plus, chef cooked meals, you're going to have a different experience than if you have $50 a month. Then you got to choose what's the best thing for you. So I'm sure economics plays something into how much coverages you should get. But from your perspective as a seasoned agent, what are the minimum things you should have? Because you can sign away UM and MedPay, right? They're not mandatory. They're mandatory to be offered, but you can sign them away. So what should people look for based on their income levels, based on their assets, based on their needs? How would you advise someone?
I would, honestly, there's no way to advise anybody of that, just because if you want to be protected, you're going to have to be willing to pay those rates. It does range, like obviously that's 25,000, 50,000 to 50,000 to 100. Each one is its own rate. Plus you have to consider the make and model of the car. So economically, I would say right now, probably it is going to be hard for people to afford having auto insurance. And it's just the way it's, because it's going up, and that's the sad part. But we have to look at the value of what it gives us to keep it in place, unfortunately.
And so if I were answering that same question, what I would offer, because, I come from a different perspective here at the law firm and seeing these things, my answer to that same question, if you were asking me, would be that we have to look at what other coverages do you have in place. In other words, are you on Medicare, Medicaid? Do you have health insurance? If you're on health insurance, what's your deductible? Can you afford your deductible? Because you better have MedPay at least as much as your deductible.
Yeah, and that's why I always tell people, if you have a high deductible, absolutely. You have to at least have that MedPay. But we can't make them.
No.
We can only recommend it.
Advise it.
And if they take it, they take it. And then when it, something firsthand happens, then that's when they change absolutely the whole entire coverage.
Yes.
Because now they understand the value of it.
Right. And so part of our goal here is to help people before you have an injury, because you can't, the worst part, speaking about auto and home as well, you can't add on insurance after a claim. You can't go, oh, well, now I want $10,000 in MedPay because the accident happened 2 days ago. It's over. Whatever you had at the time is what you've got. And so part of our big message, you and I today, is to help people, to understand an ounce of prevention is worth a pound of cure. And so what we tell people is, look, you got to know what your budget is, and you need to insure up to the max of what your insurance budget is, given consideration of all the other things. Because I'll tell you, you made a great point about should you be protecting your own assets if you cause an accident? Well, if you don't have a lot of assets, you're not going to get sued. And if you do have a lot of assets, you'd be foolish not to cover yourself to the maximum allowable, right?
Right.
That makes sense.
Yeah.
Yeah.
And there's, the umbrella policy, for example.
Just going to ask you about that. Can you talk about umbrellas?
Yeah. So that's, there's different coverages. There's $1 million umbrella, $2 million. It kind of depends on where you're looking at and the type of assets you have.
And what do they do? What do umbrellas do? How do they work?
So the way they work is they protect you from anybody trying to sue you. So it's like a leverage. So it's almost like if I wanted to sue you for a car accident, and you could use that umbrella to make a plea deal. This is how much I would give you, from that umbrella.
And if you use an umbrella, do your rates go up?
No.
Because I know also important fact for people is if you are in a car accident, and if you cause the accident, your rates are going up. If you didn't cause the accident and you end up using your MedPay, your uninsured motorist or underinsured motorist, your rates don't go up because it wasn't your fault, and that's what you pay for. And people don't get that, right? No, they just don't understand.
No, it'll show up. It'll show up on your motor vehicle records, obviously, but it'll be a non-chargeable.
Yes.
It'll reflect that on our end. So it doesn't affect anybody's rate.
which is super important to know, because that's some people won't report claims, or they won't go get the care that they need because they think, oh, well, it's going to raise my rates. Well, not if it's your MedPay or underinsured, uninsured motorist. So I think that's a big point too.
Yes, absolutely.
Let's switch topics for a minute and talk about home insurance.
Okay.
This is a big deal here in Colorado, and I just actually had a conversation with my insurance agent recently. We had a huge fire here called the Marshall Fire. Yes. Remember that last year?
Yes.
And it took out 1,000 homes and businesses or something along those lines. Mm-hmm. And what a lot of people were finding is that their home was not insured to the level that the rebuild cost was, and they lost hundreds of thousands of dollars. Number one, how does that happen? Like, that doesn't seem like a good thing, and it doesn't seem fair if your insurance was there. And number two, how do you go about making sure that your home is covered to the degree that it should be? So you want to make sure you're always reviewing that coverage. How often? I would say a year. Every year? Every year. I have some customers that do it every 6 months because they have rentals and their own home, and they're kind of scared in regards to the Marshall Fire, So they want to make sure they're adequately covered. So you always want to make sure you always talk to your agent about that and have them review it with you, up the coverage. Make sure that coverage is always at least 80% of, or a little more of, the market value of your home. And what does that include? So the market value of your home, can you calculate replacement costs into that? Do you have to, do you as the agent go, well, right now wood is twice as much as wood was before, and contractors are out this many months, and so for that replacement cost, it just went up by 30%. Do you guys do that, or how does that come into play? We actually work with, it's called 360 valuation. So It's actually a tool that we use that we type in, how many square footage of your home, how many rooms, have you customized anything? Every detail to your home is very important to provide to your agent, because that will define what the replacement cost of the home is. And what about the contents of the home? Is that a separate replacement cost? Yes, that is separately. You will have a max up to that, depending on the percentage of the cost of the replacement of the home. So we have the cost to rebuild a home in the case of a fire, maybe a flood or earthquake, and then we have the cost of replacing contents. Is that one policy, or are those two policies? It's all combined. It's all combined. Yeah, it's all combined in your homeowner's policy. Okay. And then how do people evaluate art and jewelry, and especially over time? If you had a piece of art for 20 years, maybe it's worth more than what you paid for. How do you go about that process? So for that kind of process, we do ask you do an appraisal. You should have a receipt or an appraisal put in place somewhere secure. That way, when something like this happens, you at least have that protection, so you could submit it to the insurance for that claim. And so would that be on anything that someone considers, is there a category of those? Because valuables could be relative, right? You might have china that's really valuable compared to plastic dishes. You could have jewelry, you could have art. I don't know if it's considered, what if you have four-wheelers and boats and toys that are in a garage that then the whole thing burns down? You know what I mean? How do you evaluate all that stuff? Well, I would hope anybody would have the boat and ATVs covered as well. There is coverage out there for them as well. Okay. The same limits, the same value, it would be replaced. We would just submit a claim under their own policy, so you could replace them. So they're separate than, even if they're in the garage of the home, they're not a part of the home contents, is that right? Yeah, they're not considered a part of it. Okay. That's where you would actually additionally have to, because there's maxes that we have to consider being in insurance, unfortunately. But there is policies that you can put in place to have that, to have those valuables protected. And what about common things like furniture, TVs, all that kind of stuff? How do you value that? Because you can't really get an appraisal on all that stuff all the time.
Right. I would say they would be market value of wherever when the fire or whatever happened to your home, it would be market value of that point.
So is it a good idea then, as we sort through this, for people to make a list of, this is the type of couch I have? Because not all couches are created equal, right? You can buy a couch at a discount store, or you can buy a couch at a real high-end store. You might spend $6,000 on one couch and $600 on another. A couch is not a couch. So when we're evaluating that, do you have to show, is it incumbent on the policyholder to show the insurance carrier this is a $6,000 couch versus a $600 couch?
It is very important, because we're not going to know how much the value of the couch is, unless we know the brand of it. We could look it up on our end and see how much it is.
So people need to keep an inventory of their stuff.
Yeah, it's always good to have an inventory. It might be a little bit extra, but it's always going to be good once it comes to a claim. That way the insurance company knows exactly what was lost.
Yeah, that's so funny. Like, I have a bunch of fishing rods. I love to fly fish, right? So I probably got 8 fly fishing rods. So if I were to lose everything, I'd be like, oh man, I had this rod. So what is it? Are you saying this rod was worth $100? This rod was worth $150? Like that kind of thing?
Yeah, that type of inventory,
So people have to put time into this. This is an experience that you have to do if you're going to get your highest value, is what I'm hearing.
Yes, yeah. That's, like, for example, myself, I have a list of my valuables. They might not be valuables to other people, but they're very valuable to myself. And I keep a list, not at my house, but, somewhere secure where, nothing happens to it. That way, when I do have to submit a claim, like, I can present all my valuables that I had on there. And
do you give that, let's say you had an agent. I mean, you can be your own agent, I'm sure, but if you had an agent, would you have that list in their file as well?
I would recommend it, yeah. Yeah. Some, it kind of also depends on the agent as well. Not every agent is the same. They might tell you otherwise, but I would. I would.
Okay. What about renter's insurance? Talk about that.
So the rental insurance, that's another important. So if you're renting an apartment, you're renting any type of home, it'll give you protection for your own property. So, the landlords have their own coverage in place. But if something were to happen to your personal belongings while you're there, it wouldn't cover that.
So the landlord's insurance doesn't cover anything for a renter's stuff?
No, it does not. No. And the limits, everybody's valuables are different. And so for that, we could definitely work out whatever you feel is about how much your valuables are worth.
Yeah. So it goes back to that same list of what do you have and what's it worth.
What do you have? Exactly. But the good thing is it does extend to your vehicle. So if you leave your laptop unattended in your vehicle, that you can always submit a claim, and it does extend to you having it in the vehicle.
Okay, good. Are there other types of major insurance categories that we should talk about that for the average person that they need to consider? We've talked about auto, that everyone driving needs to consider, and we talked about that. We talked about home. Everyone's living somewhere, hopefully. I mean, obviously there are some people that don't have homes, unfortunately, but for everyone that is either living in a home that they're purchasing or renting, we talked about that. Is there another category of insurance that we need to make people aware of?
I would say the deductible portion.
Okay, let's talk about that.
A lot of people don't understand that they do have to have a deductible. The lower the deductible, obviously, the lower the rate. The higher the deductible, the lower the rate.
Right.
The lower the deductible, the higher the rate.
And essentially that means that how much cash do you have on hand?
Yes.
That if you have to go to, if you have to file a claim, whether it's home or auto or whatever it might be, you have to be able to fill that bucket up before your insurance starts to pay off.
Yes.
Could be $1,000, could be $5,000, that kind of thing.
Yeah, it could be. It's, about what you would have in case there is damage to your vehicle, there is damage to your home. That is something that it would have to come into play when submitting a claim.
Mm-hmm. And do you guys do a lot of or any health insurance?
I don't, but I would like to get into it.
Okay, because health insurance is a whole nother thing.
Yeah,
and we talk about deductibles, but that's why I was asking for you if there was any other categories of insurance. So home and auto kind of go into the same bucket. Health is another category of insurance, but it's not necessarily right aligned with home and auto, but everyone needs to understand health insurance, how it works, if their company offers it, if they're getting it on their own, if they're getting it through a federal fund of some sort or whatnot. So
yeah, definitely. Everybody needs to have it.
Yeah, I agree. So if we've hit the highlights with home and auto and renters insurance, I want to pivot now onto what it's like to be working for a company, selling insurance, doing your thing, versus starting your own business. What made you decide to start your own insurance agency?
It was an agent I used to work with. He actually kind of pushed me out the door because he said it's time. Like it's something that you are passionate about, and it's time for you to make your own legacy. So at that time, I did struggle with what it's like to run a business. Because I know on the other side how to be an employee, but to run your own business is completely different. So obviously I was scared, but I did it. I took it and ran with it, and I'm here now. So that, it's just, it's been a long road. I would say a roller coaster for sure. But if it's something you truly have a passion for and you believe that you can make a difference, the slightest difference, then you got this.
Nice.
You got this.
What has been the biggest surprise or unexpected thing that you've found since opening your own business? Was there something like, I had no idea I would face this, or it would be this good or this bad, or man, I didn't even know about, 941 taxes or something? Was there something that just hit you of like, wow, I never expected that?
The taxes was a lot to understand. Thank God I have an accountant that if I have a question, she's right there answering every single question. I would say having charge of your own employees, because you can only, do so much on your side that, others aren't willing to go. So that was surprising. In my head, I always thought, okay, this is going to be easy. I got this, especially having, to be a boss, because sometimes you have to have boundaries.
Yep. Tough conversations sometimes.
Yeah. And I think the tough conversations is probably for me personally, because I'm a mom. So the mom in me comes in, and it's rough sometimes to have those conversations. I have to kind of, okay, I got to go have 10 minutes, and I'm holding back tears because I didn't want to have these conversations with, certain individuals.
Right. Well, I know being in that position myself of having those types of conversations, whether it's here at the law firm or in other places that, businesses that I've owned or whatever, I think that if I can always look at it from the aspect of, as John Maxwell, who's a renowned leadership expert, I've read lots and lots of his books and lots of his stuff. He's a guru in the area of leadership, and all businesses rise and fall at the end of the day on leadership, right? Anyway, he talks about being able to talk with caring and with candor. And so the thing that I know, that whenever I have to have those conversations, the better relationship that I've built with that person, or if someone has to have one of those conversations with me, I'm not above messing up. And so the better the relationship is, the easier those conversations go, where they know that there's caring, or I know that there's caring for me, and that the candor is to help me get better and to help us get better. So that's been something that I have found, if I can have the relationship strong, so I'm always investing in my people so that we're good there, and then having these caring with candor conversations becomes much more fruitful. And I don't know if you've found that to be true.
I'm still learning.
Mm-hmm. Yeah.
I'm still learning. I feel I have like that caring person right there. I think I care too much.
Mm-hmm.
And I understand everybody, goes through stuff, is struggling. I just can't, being a new business owner, I'm trying to definitely set boundaries, certain boundaries, and trying to deal the best I can.
Yeah. One of the primary boundaries that business owners all have to set for themselves is this boundary of work-life balance. And it's interesting because as any business goes through its life cycle, depending on how much momentum that business has and how much money it has to start out, it will require a lot of time.
It does.
But yet at the same time, you have to, as an individual owner, understand what it is that you need to recharge and to have your key relationships stay intact. Because, all relationships can handle some distance for a while, but eventually that starts to affect the relationship. So as a new business owner, what have you found? How have you navigated the waters of a work-life balance for yourself and your family?
I have the biggest support system, and that's like my husband and my kids.
Mm-hmm.
They going towards doing this. That was one conversation that we had with them, is that mom's gonna be gone a lot, and they were understanding, surprisingly, and they have cheered me on through this whole entire journey. So I'm present. Like, I give myself a limit, like if it's like till 8:00, it's 8:00. And that's when I give my whole presence to them.
Mm-hmm.
And them knowing and understanding that there's times where I do have to work extra long, and they understand.
Yeah.
So, and they know it's, we're building a legacy, and I tell them this all the time. I'm like, this is for you guys. So help me build this, and, we can have all the free time in the world, and they're doing it.
How old are they?
So there's 5. So
You have 5 children? Okay, what are their ages?
So our twins are 19.
Okay.
Then there's my 15-year-old and 9-year-old and a 10-year-old.
What's beautiful about what you just said is we're building this together, we're building legacy. Is I found when I was doing my chiropractic practices, I would have to be, I'd have my patient hours, and then I'd have my business building hours, which weren't always in patient hours, right? If I was doing a lecture or out at an event or whatever. And the more I could get my kids to understand, like, hey, come bring your crayons, let's go do this, and you can see this. Or if I was talking at an event and they wanted to come, I would let them come see me speak. And it allowed them to be part of the process. And I think with so many business owners, if they could have their families experience part of the good times, the rough times, the struggle, it brings you closer as a family, and it also makes that journey so sweet. And it sounds like that's exactly how you guys are approaching it.
Yes. I want my kids to know what it is to be an owner, and take from what I'm learning and apply it differently in the near future. I have a daughter that just graduated cosmetology school, so I'm like, here's my struggles, take them, run with it. And I have my 15-year-old self-taught nails, and she's going somewhere.
Yes.
And so just having them kind of have their own little business, but seeing the way I'm handling things, I hope they learn from my mistakes and do it differently on their part.
So good. And, we all need mentors, right? And no matter where we're at in our careers or in our lives, in school, whatever, we need mentors. And the quicker we understand that we need them and then find them, the better off we are. What are the mentors or advisors that you have found to be really important as you've begun your entrepreneurial journey?
I would say my district manager has been very helpful. So if I have certain questions, I'll call him first, whether it's to vent or, to talk about business. He's always been right there. So I think just having a mentor that's going to be there through the journey and, not give up on you for the slightest, smallest thing, I think you have it. That's gold.
Nice. Yes. And what about advisors? You talked about an accountant. Are there other advisors that you as an entrepreneur think, I need these people to support me, whether it's a banker, a health coach, a massage therapist? Is there other people that you as a business owner feel like you need to have around you aside from your accountant that you'd want to share?
I would say a therapist, because sometimes we need, I'm so sorry, we need to talk to other people besides the ones you have close at home, or even if it extends professionally. I think it's always good to have an outside person just to vent, talk to, and let them know what's going on.
Beautiful. So here's my final question for you. Have you learned or been given a piece of advice that has really helped form the foundation of who you are, what you're doing, and where you're going, that you would be willing to share with me and with our audience?
Well, there's been a lot. There has been a lot. But I'm going to go with my mom. She, I've been having a rough couple weeks, and so she, out of the blue, texted me, remember, you're always a warrior.
Ooh.
So that's something that has been stuck in my mind. So, I know I'm going to have up and downs, business, personal, whatever, but I know I can pick myself up.
Doing the warrior spirit.
Yes.
Oh,
absolutely.
That's so beautiful. Well, thank you so much for taking time and sharing your expertise and your wisdom with us, and being vulnerable to talk about what it's like to open a new business. All of this is real, and you're making a difference. And so thank you so much for coming on.
Thank you so much for having us here.
Absolutely. And for those of you watching or listening, if you found value in this, please share it with someone, get it into someone's hands, because we want to make sure that we're protecting each other and taking care of each other. And that starts with taking care of ourselves. So I hope that no matter where you're at in your day, that you have a great day, and that you remember this always: you too can make a difference.